Welcome to Module 1, Introduction to Investing in Stocks Made Simple for Nigerians. If you're watching this, you've probably noticed that your Naira doesn't stretch as far as it used to. Maybe you're tired of hearing about others making money through legitimate investments while your savings earn a tiny interest rate. This course is here to break down the stock market for you, the everyday Nigerian, and show you a secure path to financial growth. In this video, we'll cover what a stock is, why it can be better than saving, and how inflation quietly eats away at your money. Let's get started on your journey to smarter investing. Start with the basics. What exactly is a stock? Imagine your favorite Nigerian company, maybe Dangote Cement, MTN Nigeria, Zenith Bank, or GTCO. When these companies want to grow, they raise money through an initial public offering or IPO. This means they split their company into millions of tiny pieces called stocks or shares. When you buy a share, you become a part owner of that company. You're not just a customer anymore, you're a shareholder. This gives you rights and potential rewards, which we'll explore next. Owning a stock means you hold a legal certificate that proves you own a part of a company. For example, if you buy one share of Dangote Cement on the Nigerian exchange, you're now a part owner. This comes with several rights. First, you get voting rights at the company's annual general meetings, usually based on how many shares you own. Second, you may receive dividends, cash payments from the company's profits. It's like collecting rent for owning a piece of the business. As the company grows and earns more, your stock's value can rise. But remember, if the company struggles, the stock price can fall. That's the risk and reward of investing. As a shareholder, you have a say in major company decisions. This usually happens at annual general meetings where you can vote on important issues. The more shares you own, the more influence you have. Another key benefit is dividends. If the company makes a profit, it often shares a portion with its owners, you, the shareholders. Dividends are like a reward for your investment, paid out in cash. This is especially attractive for many Nigerians looking for steady income. But remember, the value of your investment can go up or down depending on how the company performs. Investing in stocks comes with both risks and rewards. When a company does well, its stock price usually goes up and you benefit from both price appreciation and dividends. But if the company faces challenges, the stock price can fall and you might lose some of your investment. This balance of risk and reward is at the heart of stock investing. It's important to understand that while stocks can help you grow your wealth, they are not without their ups and downs. Being aware of this helps you make smarter decisions as you start your investment journey. Below, please do not forget to subscribe, like, comment, and tell your friend about this channel. Now that you know what a stock is, let's talk about where you can buy them. As a Nigerian investor, you have two main choices, the local market and foreign markets. The Nigerian Exchange NGX is our local market where you can buy shares of companies like Access Bank, Jerigu Power, or Transcorp. These stocks are bought and sold in Naira, making them familiar and accessible. On the other hand, you can also invest in foreign markets such as the US, where you can buy shares of global giants like Apple, Google, and Tesla. Each option has its own pros and cons, which we'll discuss next. Nigerian Exchange, or NGX, is the main place where you can buy shares of Nigerian companies. These stocks are denominated in Naira, and you can invest directly using your local currency. One big advantage is that many of these companies pay dividends in Naira, providing a steady income stream. It's also a familiar environment for most Nigerians, making it easier to get started. However, these stocks are affected by the value of the Naira and the ups and downs of the Nigerian economy. This means your investment can be impacted by local economic changes. Investing in the Nigerian exchange comes with both benefits and drawbacks. On the plus side, you can buy shares directly in Naira, and many companies pay dividends in the same currency. It's a market you know with companies you recognize. However, the downside is that your investments are exposed to Naira devaluation and the volatility of the Nigerian economy. This means that even if your stocks go up in value, the real worth of your money can be affected by inflation and currency changes. It's important to weigh these factors when deciding where to invest. Foreign markets, especially in the US, offer Nigerians the chance to invest in some of the world's biggest companies like Apple, Google, Nvidia, and Tesla. These stocks are traded on major exchanges such as the New York Stock Exchange, NYSE, and NASDAQ. The main advantage is that your investments are in US dollars, which help protect your money from Naira inflation. These markets are also larger and more diversified, giving you access to a wider range of opportunity. However, investing in foreign stocks requires special brokerage accounts and funding in dollars, which can be a hurdle for beginners. For most beginners, the best approach is to have a mix of both local and foreign stocks. Start with a core allocation to strong, dividend-paying Nigerian companies for steady Naira income. At the same time, reserve a portion of your portfolio for dollar assets to help preserve your purchasing power. This balanced strategy allows you to benefit from the strengths of both markets while reducing your overall risk. By diversifying, you can enjoy steady income and protect your wealth from the effects of inflation and currency devaluation. Let's talk about inflation, the silent tax that reduces the value of your money over time. In simple terms, inflation means that the average cost of goods and services is rising. In Nigeria, we've been facing high double-digit inflation, often above 20%. This means that every year your money buys less than it did before. It's a hidden force that slowly erodes your savings, making it harder to keep up with the cost of living. Understanding inflation is crucial for anyone looking to grow their wealth and protect their financial future. Inflation is the gradual increase in the prices of goods and services over time. For example, if inflation is 20%, something that cost 1,000 last year now costs 1,200. This means your money loses value if it just sits in a bank account. In Nigeria, high inflation is a reality and it affects everyone. If your savings don't grow faster than inflation, you're actually losing money in real terms. That's why it's important to find ways to make your money work harder for you, rather than letting it lose value year after year. Let's look at what happens when you keep your money in a traditional Nigerian savings account. Banks are required to pay a small interest rate, often set by the central bank. In 2024, most savings accounts offer just 1% to 4% interest per year, but with inflation running at 20% or more, your money's real value is shrinking. For example, if you have 1,000,000 and the bank earning 4% interest, you'll have 1,040,000 after a year. But if inflation is 25%, you actually need 1,250,000 to maintain your lifestyle. You've lost real value, even though your balance went up. Saving in the bank may seem safe, but it's actually a slow way to lose wealth. The interest you earn is almost always less than the rate of inflation. This means your money can't keep up with rising prices and you fall behind the cost of living. Over time, this can have a big impact on your financial security. That's why it's important to move beyond the savings mindset and look for better ways to grow your money. Investing in assets that can outpace inflation is key to building real wealth. This brings us to the main advantage of investing in stocks. They are one of the best ways to protect your wealth from inflation. When you own stocks, your money is working for you, growing with the economy. Stocks offer two main ways to beat inflation: price appreciation and dividends. As the company grows and becomes more profitable, the value of your shares can rise and you may receive regular cash payment. This combination helps your money grow faster than inflation, preserving and increasing your real wealth. Let's look at a real-world example using Guarantee Trust Holding Company, or GTCO. Imagine you had 500,000 to invest 3 years ago. If you put it in a traditional savings account at 3% interest, you'd have about 546,000 after 3 years. But if you invested in GTCO stock, with an average annual return of 15% including dividends, your investment would have grown to about 760,000. Not only did your money grow faster, but it also beat inflation, increasing your real wealth. This example shows the power of investing in strong, profitable companies. Let's compare the two options side by side. With a savings account, your 500,000 grows to about 546,000 in 3 years. But with GTCO stock, your investment could reach 760,000. The difference is clear: stocks offer much higher growth potential. While your cash value goes up slightly in the bank, inflation means you can actually buy less with your money. With stocks, you not only keep up with inflation but also grow your wealth over time. This is why investing is so important for anyone looking to build a secure financial future. By investing in stocks, you give your money a chance to grow faster than inflation. When you choose strong, profitable companies, your investment can increase in value and pay you dividends. This helps you win the battle against rising prices and maintain your purchasing power. Instead of watching your savings lose value in the bank, you're actively building wealth. This is the core reason why so many successful investors choose stocks as their main investment vehicle. You invest in stocks, you're not just collecting interest, you're co-owning successful businesses. As these companies grow, so does your investment. You benefit from their profits through dividends and from the increase in their value. This is a powerful way to build wealth, especially in an economy where inflation is high. By becoming a shareholder, you align your financial future with the success of leading companies, giving yourself the best chance to outpace inflation. Let's recap what we've learned so far. A stock is a share of ownership in a public company, giving you rights to profits and a say in the business. The Nigerian exchange offers naira-denominated assets, while foreign markets offer dollar-denominated assets. Saving in a Nigerian bank is a guaranteed way to lose wealth because interest rates are much lower than inflation. Investing in strong stocks like GTCO, Zenith, or Dangote allows your money to grow with the economy, offering the best defense against inflation. We're now equipped with the foundational mindset needed to build lasting wealth. Understanding the basics of stocks, the impact of inflation, and the benefits of investing puts you ahead of the curve. The next step is to put this knowledge into action by exploring how the Nigerian Stock Exchange works in practice. By shifting your mindset from saving to investing, you're taking the first step toward financial independence and security. Our next video will dive into the practical side, how the Nigerian Stock Exchange (NGX) works. We'll move from the theoretical concept of what a stock is to the actual marketplace where you can buy and sell them. This will help you understand the process of investing, from opening a brokerage account to making your first trade. Stay tuned as we guide you step by step through the world of stock investing in Nigeria. Thank you for joining me in this first module. You've taken an important step toward understanding how to make your money work for you. Remember, investing is a journey, and every bit of knowledge brings you closer to your financial goals. In the next module, we'll get hands-on with the Nigerian Stock Exchange and show you how to start building your investment portfolio. I look forward to seeing you in Module 2 as we continue this journey together.